All right, what's up, everybody? This is, I think, the second conversation I've had for the Mortgage Coach YouTube channel around what leaders in the industry think about this Rocket acquires Redfin conversation.
Mhm.
I do want to start broadening the concept because I think it's not just about Rocket acquiring Redfin. It's just about a movement. I mean, this is not a new. It's a big deal. It's the biggest deal of its sort. But we're already hearing rumors of other, and I'm not going to repeat rumors, but rumors of other big players buying big players. But
Mhm.
we're going to continue to see this happen. So today I've got Chris Sorensen, the head of retail production for PRMG, a good friend, an incredible client. In full disclosure, PRMG uses the full Trust Engine platform. So they're using our data services, they're using Mortgage Coach. And I think we're very like-minded in that most loan officers need to transform. They need to become data-driven mortgage coaches. What's up, Chris?
How's it going, my friend? Appreciate being here with you as always.
Yeah, no, it was good. It was so cool. You reached out to me early in the morning and we were able to connect.
Five
What
o'clock, for God's sakes, and I said, "Hey, are you up?"
was
And you
it?
called
Was
me
it
back
five
within,
o'clock?
yeah. And I just, because I know you're an early riser, so I text you, and like within seconds, you called me back. I'm like, gotta love Dave Savage, man. What a beast! You
Yeah,
always
hey.
set the bar so high for everybody around you. I love it.
Yeah, well, there's no rest for the worthy, and I do wake up early. And when I get a text and hey, can you talk from Chris Sorensen, one of my biggest customers, like what am I supposed to do? Uh,
Well, I just needed some of that brain power of yours to get my day going.
Yeah, so let's why don't you just kind of describe your platform for anyone that's not familiar with you so they kind of know how many loan officers, what your role is, and then let's get into how you're taking in this information and what actions you're taking as an IMB to win in the future.
Yeah. So, I mean, we're a three-channel company, correspondent, wholesale, and retail. I run the retail division. Roughly 650 LOs. It's the Pareto principle, 80/20, right? That's typically pretty standard in our industry. But with that said, when I saw the news, for me personally, and I loved watching what you and Brian Hale were discussing. It just kind of got my juices flowing because it's further validation to what I've been espousing to anybody who will listen to me, which is that there's going to be a further melding of the real estate and lending professional if you're going to want to compete with the big boys. I mean, the big boys being Zillow, Redfin, Realtor.com, Homes, etc. And now with this acquisition, it's just further proof that yes, the consumer demands a one-stop shopping buyer-borrower experience. And are you going to deliver it, or are you going to be on the outside looking in?
So, by the way, that reminds me that you had just watched the Brian Hale interview. That's what, triggered you to call me. So, Brian Hale, thank you. I've had a tremendous amount of positive feedback from that interview, Brian. And I'm currently working schedules with some CEOs and some other heads of production. So stay tuned. Let's hear all the different perspectives. So, I mean, I agree. Well, let's talk this out because I
Yeah.
do think the
There's a lot
idea.
of misconceptions, and I have to be very careful where I choose my words and verbiage purposely, because otherwise you're going to get the blowback of, "Oh, Chris, you're suggesting people are to be a jack of all trades, master of none," and nothing could be further from the truth. But please go ahead.
Yeah, because I do think the customer, and by the way, I've got a call coming up with one of the executives from um, oh, what's JD Power.
Ah,
So I'm going to be talking to one of the executives of JD Power in the next couple days, actually, hopefully by next week. And he's been pretty active on social media, just talking about what the customer wants. They want a sharp price. They want a convenient experience. They want speed. But you know what they also want? They want advice. They want to achieve financial well-being. And so I don't think it is just about one-stop shop. It's about speed, price, and advice.
so Dave, one of the lines that KP, obviously friend Kevin Perennial, our chief production
Who I've
officer,
interviewed several times here.
right? He has a line: cheaper, better, faster. But it's interesting that studies show, if you actually, in preparation of being able to talk to you today, I've been doing a lot of reading this morning. And one of the things that I found was that the fintech mortgage platforms end up charging 16 basis points more than the norm. So while the consumer says and studies reveal that they profess to want cheaper, they will ultimately end up paying equal to or more than the norm or the median rate and fees for services for convenience. They will pay for convenience. And so how convenient can we make the buyer borrower process? One of my favorite quotes that drives me and always has for many, many years is Walt Disney. People will spend money when and where they feel good. And
Right.
so, you, not to pander to you, but you've made a living over the decades of basically making clients, making borrowers feel good about the borrower experience. And you've trained us and you've taught us and said, hey, financial literacy, demonstrate to these folks, obviously, why making this move with these two or three options is the best for them. Well, when you do that combined with the emotional side of the equation, which is buying a home, that's why this Redfin with their 50 million monthly visitors was so powerful of a decision for Rocket. They've got all the visitors, and now they're going to be able to take the emotional side of the thing, which is, hey, everybody wants to buy a home. Nobody wants to get a loan, but they want to buy a home, so they get emotionally invested up front, and then Rocket resolves or solves their problem for them all in the same ecosystem. That's pretty powerful.
Yeah, yeah. Well, I want to make a point and also remind people of like Southwest Airline. I mean, there was a time when Southwest was the cheapest airline. Like you go search, they were cheapest, but they're not the cheapest anymore.
Mm-mm.
But they've built loyal people. They are convenient. They make it easy. They whenever they have a route, they have multiple. They've got a lot of different time options, and but their staff is funner, nicer people as a whole. So it's not about like cheap matters, low cost matters, but I would make the case that value matters most. And and I think Rocket in this acquisition, the Redfin app is debatably the best search app. So they're I look at it and think, hey, they made a bet on purchase. They
Mm-hmm.
got a purchase funnel and they're delivering more value because they've got an incredible, you know, digital experience.
Yeah, I know that. Look, for me, when I saw what was a when I saw the headline and did some research on it, it made me think back when I started in the real estate business here in Orange County. I worked for a company, kind of privately held company, a large company in Orange County, California. And I followed my loan officer at the time. His name is David Chow. He's since passed away, but I followed him around like a damn puppy dog. Went with him when I refer a client to him, went with him on the application. And it was interesting that after probably about 1 year of doing such and reading guidelines and learning his side of the business, that my conversion at open houses, door knocking, cold calling, sitting at the up desk went through the roof. And so the more a real estate professional knows about the lending side, the better off the client is, and vice versa. And so I do think that, and it was interesting too, when HUD put out that mortgagee letter, Dave, back on, I think the date was actually December 15th, 2022. I'll never forget that because I, as a banker myself, had to indemnify loans where there was a blurring of the lines of a real estate and a lending professional being the same person on the same transaction. So for them to throw their hands up and say, okay, now we're going to align with Fannie Freddie, and we no longer care if you were the agent and the loan officer in the same transaction, how that manifested itself today is you're seeing a ton of lenders, and we're one of them, that are creating platforms that allows for people to be able to have a JV, be able to hang your license and co-originate. Hell, we even have it set up where you can hire a top producing agent as a business development specialist with no license, right? And I've got a 13-page attorney opinion letter discussing the legalities of it. But I bring that up because I see this Rocket-Redfin as validation that what we're doing in the industry is actually a good move. It may be scratching the surface today, but I believe it's going to become prolific tomorrow.
So let's do this. Let's do the rest of this conversation in two chapters. Let's go first because you're an IMB and you've got a lot of local referral-based loan officers, and you
Hmm.
also have multiple channels. You
Yep.
you you do have multiple channels, but let's focus on the local referral loan officer. What are you telling them? And then let's talk about new models because I also know that you guys are experimenting with realtors and new models. So what advice are you giving to your your retail loan officers and the producing leaders that you have.
Yeah, they have to embrace the tech, right? I mean, everything is about lead aggregation and lead management. And, through your modern mortgage summit and things like that. I mean, to be able to utilize the technology, especially through what you've provided us with Mortgage Coach and Trust Engine. And I don't want to make this sound like a commercial for your services, but for goodness sakes, when you can tell a real estate agent, first off, just taking your own database as a loan officer and putting it in there and having it monitored, not just for the obvious listing alerts, mortgage alerts, etc., but the life alerts, what we call the life alert Ds, right? Deployment, diapers, diamonds, divorce, downsizing, death. Roughly 20 to 24% of the time, that will result within 6 months of somebody taking action, buying, selling, or refinancing. So to move further up the daisy chain is all important. And to be able to tell a real estate agent that, look, I can ingest your leads that you've been most likely not monitoring yourself, but I can ingest these leads and at no cost to you, monitor these on your behalf and be able to alert you and give you push notifications when one of these life alerts or one of these alerts occur, is going to be able to put commission checks in an agent's checking account more effectively than simply just splitting some Zillow leads. You're talking about a 20 to 24% ROI versus a 1 to 1.5% ROI on Zillow leads. Where would you rather spend your time and energy? Obviously, because you've set this construct up. But yes, I'm telling my people, please, you've got to make sure you embrace the tech. Don't let it overwhelm you. Just bite-sized pieces. Start with your CRM, move out to Mortgage Coach, make sure that you're giving a total cost analysis and giving the consumer what they need. Focus on financial literacy, which is also something that you and I are both passionate about. We should probably talk about. And then making sure that you have a follow-up system that perpetuates what you began over here and it just never stops. I could drone on. I mean, wind me up and let me go, Dave. So I want to make sure I pause long enough to make sure I'm staying on point.
Yeah, yeah. So one of the things that we're passionate about as a tech provider is is helping loan officers have more conversations. Like there's two things that I believe that a local referral-based mortgage professional needs to do is they actually need to be able to have more conversations with people. And here's an example of one of the ways that you can use data to do that. And I want to delineate it because it's not just telling someone when, oh, you had a new baby. The key is to be able to tell someone when there is a combination of non-credit data that, hey, someone is really likely to move up right now. They're eligible to move up and they qualify to move up. And you're using a combination of data signals to do that. And I think that the loan officer that is able to do that has a distinct advantage. And then I think they bring a greater level of value to a real estate agent when you can actually do that. And then, of course, having a better conversation, like being more compelling. And I think we need to get on the offense and both mortgage and real estate. And we need to start creating transactions, like not waiting for the consumer to call us, not calling them once they ran a credit report with someone else, like you're late, you're behind, but actually go to the consumer and go, hey, did you know, I know you got a 4% mortgage, but if you move up right now, you've got a great return on investment. We're seeing a lot of first-time sellers that are in the market. And then look what moving up looks like. Do you not feel that that's almost like table stakes for loan officers nowadays?
It is. And you said something. I'll go back just a couple seconds, what you said. It's not just waiting for the mortgage alerts and those type of alerts, but going back to what I said and what you just said, which is the life alerts, moving further up the daisy chain. Well, there's nothing better than, in my humble opinion, than promoting. Look at why do we all, as mortgage professionals, why for 37 years? I mean, I was one of those agents that people would suck up to. Now, from 93 forward, I started sucking up to them. Why do we all suck up to the realtor? Why? Because they're doing the legwork, the grunt work to be able to get to the consumer first. And why do they get to the consumer? Because people buy on emotion first and then rationalize or justify the expense secondarily. So the tools, what's cool about the technology that we have today is as an agent, you've got a greater chance, as a loan officer, you've got a much higher probability of doing D2C, direct to consumer, than you've ever had before. And to use the tools that allow you to be able to, on your signature line, put on ads on Facebook saying search like a realtor, click here, and having direct access through an IDX feed to the MLS, where only the consumer sees your smiling face and a link to your website, is a game changer. I mean, get to the consumer and attract them through the emotional purchase of a home and let them search with AI technology. The technology that exists today, somebody can use my link, search for a home, say, you know what, I like the look of that kitchen. Show me other homes that have a similar kitchen. And boom, in the Houston market, here's 5 other properties with a kitchen that looks just like the one that you liked with the images that you viewed online. That gives you a push notification, gives you a reason to reach out to the consumer, and then talk about how you can help them finance that dream kitchen that they got all emotionally excited about. And that's what's changing in our marketplace today. The loan officer doesn't have to. They should have their favorite agents. But when an agent calls you up at 8 o'clock at night and wants to kick your teeth in, you shouldn't have to put up with that nonsense anymore, not with today's technology.
Yeah. And we need to empower consumers to make better decisions. I'm actually going to show you something that's going to be the first time I've shown it to a lot of individual LOs as we've been designing this new AI feature.
Okay.
But this is the first time I've showed it in a way that's going to go public. I want to get your opinion on it. We're currently calling it our Explain with AI, although we might change the name.
Okay.
So when we give the total cost analysis to the consumer, and when the consumer says, we might call it Ask AI, but it just is, oh no. Don't you
Uh,
just hate when you get
an error
what?
message.
An error message? Let me try this again in a minute. Um,
Yeah, that's when I write an email to the IT support.
yeah, actually, Paul, make a note. We're gonna edit that out. Let's see if we can get it to work.
And if you hear background noise, luckily, fortunate for me, I'm working from home. Unfortunately, the gardeners just show up, so they're weed whacking right now. So hopefully you're not hearing that.
Okay, hang on. Let me go back. It worked. I don't know why it didn't work. So here he goes. I'm going to show this for the first time, and we've got this new feature. It's called Explain with AI. So this is the Mortgage Coach experience, and
Okay.
consumers, everyone's using AI now. And
Right.
so when the loan officer clicks on that, it literally took and consumed everything that's in that total cost analysis. And now the consumer can say, one of the most common prompts we're saying is, what is the best loan option if I'm living in this house for 5 years? Boom. And now AI is giving feedback. It's letting them know what is the lowest cost loan option. And boom, it's letting a consumer interact with the mortgage coach experience. And by the way, all you loan officers that are mortgage coaches, when we roll this out, you'll be able to see how the consumer is interacting with your total cost analysis. What do you think of that feature, by the way, Chris?
I'm blown away. That is so cool. That is, yeah, it's God. You know what's changing? What used to take 5 years is now going to occur within 1 year, and accelerate from there. It is, we're just beta testing right now. I'm not going to mention the name of the company, but we're beta testing AI technology where I can make my loan officers, their LOAs, and their processors the smartest people in the room. Imagine somebody having a photographic memory of all regs. They know every Fannie Freddie guideline in the updates. They know every Ginnie guideline for FHA, USDA, and VA. You can, again, upload in your application. You can upload the paycheck stubs, W-2s, tax returns, bank statements, and boom, it spits out and says, hey, on page 5 of on June 13th of the bank statement, there's a large deposit that needs to be explained per this particular guideline. And so it's going to increase the knowledge base. It's going to increase the quality of submissions, and we're going to gain efficiencies. But more importantly, we're going to give the loan officers instant gratification so they don't have to go back and forth to their borrowers saying, hey, I forgot to get this because I processed after submission. I'm actually knowing in advance what the underwriter needs per the guidelines. And I no longer have to deal with that loan officer that only closes 1 or 2 deals a month. So maybe they don't have the same knowledge as the one that closes 10 to 15 deals a month.
So yeah, no, it's amazing. So it is safe to assume that to the loan officers that you have today, they need to adopt the technology. They
It's
need to go
essential.
beyond here's your rate, here's your payment, here's your cash to close, because price and speed are not enough to remain relevant and win. And there's some very, very big players that are that are aggregating, every consumer in America. And if you want to win, you need to really help people with advice, and you need to give advice with price. And so that is your message to every retail LO.
1,000%. And what makes me, I feel bad, like I said, I'm been doing this for 37 years, like you. And I think what happened was people became, I'll use the expression, fat and lazy during the COVID years. Business, was double production. So, I mean, you could literally just, loans were falling out of the sky. And so a lot of people lost their skill set. And people talk about, hey, this is a difficult market. And by volume, obviously it is. And yet there's still those people, that same upper 10% that are still thriving. I loved what Shant said at a conference, last year, where he said, look, I'm having to work twice as hard to make half the income, but I'm working twice as hard, and I'm doing the basics where you're not. And
Right.
that's there's something to be said for that. I mean, there is no substitute for hard work, especially if you combine it with the technology that people like you and others are offering today. You combine the two and those daily disciplines, you're not going to have the problems. But I will tell you this, the loan officers that don't embrace technology and don't have the daily non-negotiables, they're going to find themselves out of a job in not too short order. And maybe that's not a bad thing. I mean, we've seen a ton of attrition over the last 18 months. I think we have more to go.
Yeah. Well, one thing for sure, the consumer is going to get a better mortgage experience. They're going to get a faster more experience. They're going to get a more convenient experience, and they're going to get better advice to buy the home and to achieve financial freedom. So that is happening. If you're watching this and you're not using Mortgage Coach, you're not using data, you are in the have-nots. And if you do want to learn more about it, reach out to me. So let's talk about business model. And what are you guys doing, given the trends that are happening? How are you evolving PRMG from a business model perspective?
You know, like a lot of IMBs, I mean, you try to make sure that you eliminate any and all excuses from your production team to point their finger at you as the company. And so, of course, you want to make certain that they have every product known to man and then some, right? If we can't do the loan, the darn thing shouldn't be done. So Fannie, Freddie, of course, Ginnie, seller servicer, non-QM, in-house brokering ability, jumbo, so whatever it is, obviously, commercial loans, referrals, HECMs, et cetera. So no matter what it is, you can take that client, funnel them down, and take care of them and make sure that you get the referral business because of fulfillment. So you get the product and then you have great fulfillment. So that's just a given. You have to have that. But I will say that one of the things that I've also, and I mentioned this earlier in this conversation, and I've adopted and created a construct that I call the real estate partnership program. And think of it like a JV agreement. So if somebody is a broker owner of a real estate firm and they don't want to go through the headaches of opening up their own sub IMB with somebody who's proposing, hey, let's do a joint venture. Now you got to get an IMB, you got to do warehouse lines, you got to set everything up. What if you could have the equivalent and not have to actually go through all that rigmarole? So without doing a sales pitch, I'll just tell you that I think more and more you're going to see people needing, because brokers are going broke. Real estate brokers are going broke. And so they're going to be looking for additional verticals. And so myself and others in our space have come to the rescue, for lack of a better expression, and are creating an ecosystem that allows them to create verticals for the mortgage side and do it in a compliant manner. And so there's, the low-hanging fruit, of course, are those people who decide, the real estate agents who decide to get their NMLS license and co-originate. I tell agents all the time, look, keep doing exactly what you're doing, keep working for who you're working for. But if you choose to get licensed, that the work that you do now to attract customers is called business development, and I can compensate you for that. I, meaning the industry, can, and they are, and we're seeing that happen more and more. We also have a vertical that allows for top producers, as I said, Dave, that, if you're a top producer and I can justify giving you a small salary, well, then I can pay you a salary plus an override, and you don't have to be licensed. I just have to financially justify your existence. So what you do to generate opportunities has value to me as a mortgage lender. So keep doing what you're doing. You do what you do best, and I need most. You keep doing business development, and I'll hire you as my business development specialist part-time, pay you an override for the activities that you're doing. In exchange for that work, I can legally compensate you. So
So would you do you agree, and I've been talking about this for over a year, that there's never been a better time for one new loan officers to get in the business. Like AI can train them. AI can be a deal desk. Uh, if you set them up with MortgageCoach and you set them up with our data services, like, hey, you could put your 300, your 500 people that you know in your database, and you're going to get opportunities. And then you can literally deliver a mortgage experience as good as a 20-year veteran, and you've got an AI assistant. So like it's never been easier for new people to come into the business, whether that's a real estate agent that wants to, do mortgage, or whether that's just a brand new loan officer. Do you agree with that thesis?
1000%. And we literally, once a month I host what we call Branch Manager University, where we bring in new managers that have been hired and we put them through a 3-day intensive course to indoctrinate them, get them up and prep so they can get out to their respective states and hit the ground running under our system. And we literally just talking about that the business is so much easier today to be able to scale than it's ever been before. And it's interesting too. I think that some of the newer loan officers that come in without that have not been spoiled by the past, they don't have bad habits, they don't have a attitude problem. They just come in with all the enthusiasm. They will listen to people like you and I, and we'll tell them, look, this is exactly what you need to do and how you need to do it. They do it, and then they have success. And lo and behold, it's like, then people's, their detractors might have something to say and have excuses, but the bottom line is there are no excuses. This business is tough. And I've always told my team, the business is tough, and thank God for that. If it were easy, it'd be further commoditized than what it's already been. And so you can go and work for some companies that will pay you as, if you want to be a headset desk jockey and make $500, $400 a loan, that's your prerogative. But if you want to make that higher commission, if you want to actually make a multi-six-figure income, then embrace the technology, make sure you're giving above reproach customer service, do what you say when you say you're going to do it. And yeah, sorry, but I think it's relatively speaking to that end, an easy business by comparison to the folks that have gone out and gotten their doctorate or their master's and are still going to make 75 to 150 grand.
Yeah, no doubt. Yeah. One of my favorite quotes that I think I quote it almost every time I speak at a keynote. I know I've shared this quote because I've spoken at a number of PRMG sales rallies, is that the illiterate of the 21st century will not be those who cannot read and write. And by the way, everybody, with AI now, you don't need to be able to read and write. Like you can either just talk to AI, you can listen to audiobooks and podcasts. So reading is no longer essential to literacy, and writing, like you could write a bunch of scribble and then put it into AI and say, hey, make this easier to read and remember, and AI will spit out something beautifully. But the illiterate of the 21st century will be those who cannot learn, unlearn, and relearn. And so I think the challenge
Powerful.
is that so many loan officers need to unlearn their old ways of doing things, and they need to relearn the new best practice way of doing things. Any thoughts on that?
Yeah, no, 1000%. And, we all say we have to be coachable, right? And one of the things, and I've said this to you, I said, Dave, one of the reasons why I love to have you speak to my team is because I don't know anybody else out there that speaks to as many originators who are closing loans at a high level than you do. I mean, you are constantly out there having, I'm obviously not a producer anymore, but you're talking to people who are today in the trenches making things happen, and they're performing at a very high level, and you talk to them and you record it and you put it out there for the rest of us. I was a college dropout when I got in this business back in late 87. And one of the things that I did is I happened to go to a free class that Tony Robbins was putting on at the city of Irvine, UC Irvine.
By the way, we were at the same. I was there. I
You were
was
there?
UC. Yeah. Well, I got in the business in '86, but I don't remember exactly what year it was. But it was the '80s, And
Yeah.
and Tony Robbins did a thing at UCI, which was basically a,
Like it
as you sell.
sell you to this next thing. It was a free deal to sell you to those
Yeah,
next big
but by
thing.
the way, I paid and I went to the next thing,
You're-
and it
I didn't have any
changed my
money, my
life.
friend. Well, let me tell you my takeaway from that's so funny. What a small world. The takeaway that I received that has paid me massive dividends is he said to this 24-year-old kid at the time, he said to the audience, you don't have to reinvent the wheel. You simply find people who are successful in the field that your chosen field and mirror their actions. Just do what they do.
Yeah,
And for me, that was the biggest epiphany. I'm like, well, hell, I can do that. And so I did. For me, it was Mike Ferry. Mike Ferry, Tom's dad said, go out and knock on 1,000 doors. I'm like, I can do that. Call 100, get 100 no's. And that even if you suck at your job, he didn't say it this way, but if you suck at your job, you're going to get one person to take pity on you and say yes. And so all of a sudden, my first year, I'm making six figures and never looked back because I was like a whirling dervish of activity. And you combine that mental fortitude, those daily disciplines with today's technology, forget about it. There's no excuses. I get excited just talking to you because I see my own son following that footsteps. He's finally picking up like, you know what? I've got to I have to have a game plan and I've got to work my plan every single day and don't allow anything to interfere with your daily disciplines, period. And now
yeah,
I think because he has two little girls, he's got his wife and two little girls to feed. He's much more motivated than ever before. So he's staying disciplined, but anybody can do it.
yeah. Well, I remember that, and that was really key information. The big life-changing experience I had at I think it was a 4-day workshop. The first day was like the
Did you walk on
firewalk.
hot coals?
Yeah, I've done it 2 or 3 times. So
Nice.
I did the firewalk, and then he had 2 days. It was called Date with Destiny, and what I learned, and then I at the same time I was doing what he had is called Personal Power. Used to be a bunch of, and by the way, guys, I did Personal Power last year again. Although it's an app now. It's called Mastery Breakthrough or something like that. It's like $350, but it's like 10 minutes a day with an exercise. And what I learned that was transformational for me, and I consider it literally the most important personal development experience of my life, is it taught me how to reprogram my mind. Basically how to unlearn some habits and skills that I had. And I had some bad habits in my early 20s.
Don't we all?
And then relearned some new habits. And at the end of the day, what I came away from that, and I still talk about it from stage all the time, is that you're gonna pick your skills and your daily habits, and they're gonna pick your life. And what I tell loan officers all the time right now, you're gonna pick some skills and habits, and they're gonna pick your levels of success going forward in the mortgage industry. And most loan officers need to stop delivering fee worksheets. Most loan officers need to start looking at data, taking action on data, and then delivering, a real transformational experience to consumers.
I muted myself only because I mentioned earlier, I'm not sure if this will make it into this interview or not, but I've got my gardener here. I rarely do I work from home.
Well, by the way, we can't hear your gardener. I mean, I know you're
Oh,
muting, but these mics now do a really
oh,
good
thank God.
job.
Okay,
Like my
good. Because I
dog
was
has barked a couple times and you haven't heard it, and
okay, good. I was
yeah,
mortified. I'm like, oh man, of all the times, right? He's right outside my window here.
we cannot hear it at all.
Okay, good. But it's funny. One of my one of the lines that my dad gave to me early on, he said, son, he goes, you suffer from an acute affliction. He goes, it's called arrogance of youth. And once I became more humble and it became more coachable, my career took off. And I've had, like everybody, we've all had our setbacks, right? I think who didn't get, if you were in the space and you actually were taking on the responsibility of warehouse lines, many of us got hurt badly during the Great Recession from 2008, 2010, that 2-year window period there, plus or minus, was devastating. But I, like everybody, it's like anybody and everybody actually who remembered the disciplines that got you there in the first place and started exercising those daily disciplines was able to bounce back, myself included. And so, yeah, the only advice I would have for somebody who is struggling mentally right now, financially and mentally, is think back about what got you to be a successful superstar in the first place and go back to that feeling. People, there is no easy way. There is no easy answer. The technology combined with hard work is going to make you a superstar. But if you're not using the technology, you're pushing a boulder up a hill.
Yeah, agreed. Well, it's any last thoughts? You're on this YouTube channel. First of all, thank you for always,
The only
watching
thought
the
I want
content
to,
that you want.
yeah, the only thought I want to bring up is I think for something we talked about early on, for your benefit as well as for mine. I mean, we need to promote, obviously, we're a community-based lender, right? And that's what you promote. You thrive in that community and you encourage all of us to go out there and serve for success. There are few things that you can do that can make a greater impact than teaching others about financial literacy. Yeah, and this is near and dear to both of our hearts. I wrote a book called Financial Sense to White Picket Fence, in which I teach the 4 Bs: budgeting, borrowing, buying, and beyond. And the beyond is where I teach people how to retain what they obtain. But taking that knowledge base and going out to the high schools, the community colleges, the 4 universities, and offering your services to be a guest presenter, you combine that with what you've created, which I want you to take the floor and run with this. You can actually take what you've created, be an ambassador, and actually make a huge impact where it matters most, helping the next generation of home buyers become a successful homeowner, because the wealth effect is obvious. If you're watching this video, you already know this, but Dave, just as a reminder, what do people like myself and others need to be doing to be able to support your efforts?
Say that again.
I was asking you, what do I and others need to do to support your efforts in financial literacy?
Oh, yeah. Well, first of all, you need to make sure your loan officers are delivering advice with price through Trust Engine and Mortgage Coach. And then two, we need to go beyond that. Like guys, we have a financial literacy crisis in America. We have an affordability crisis in America. Last year, the average age of a first-time home buyer was 38. It is a massive problem and it is a massive opportunity. So we need to get out there and get more 20-year-olds into homes, people in their 20s. And so my for-profit is Trust Engine and Mortgage Coach, and the nonprofit is First Home IQ. Check out First Home IQ. There's a little 5-minute quiz that anybody can take, and going through that process will make you smarter around homeownership. Mortgage professionals and people that own homes do pretty good on it, but 20-year-olds and don't do very good on it. They're lucky if they get 56%. So we need to lean into financial literacy. And if you're a mortgage professional, you can do that in a way where you'll close more loans, you'll sell more homes for realtors, and you will really help address one of America's biggest problems.
Amen. Amen. So
All right, man. Well, dude, I appreciate our partnership. You guys are always incredibly innovative. You do a great job of leveraging our tech stack, and then I always appreciate being invited to your sales rallies and everything. Thank you for everything you do, Chris.
thank
Thanks for
you.
making time to bring your take to this news that came out on Monday and what's happening in the market. And look forward to doing this again with you, brother.
Thank you, my friend. I appreciate you, Dave.
All right. So anybody watching this, if you have not already subscribed to our channel, subscribe to the YouTube channel. If you want to learn more about what I do, follow Savage Insights. Whatever the next interview I'm doing is always at the top. There's a mobile club where a couple times a week I'll send a text out to whatever I think is important. Now again, that's assuming you want to go from loan officer to data-driven mortgage advisor. Make sure you check it out. Take care, everybody.